What's going on, everybody? It's Stas here. So an interesting day in the stock market today. We had the S&P and the Dow break even. The NASDAQ 100 went down 0.5%. And we had the Russell 2000 barely get a green day in, up only 0.1%. So today, we're going to be breaking down some technicals, going over a bunch of stocks to buy now. And I also want to share with you guys what my thoughts are on the overall markets, where I see things going. So sit back, relax. Today, I'm sipping on this little Monster. This is a brand new drink I'm trying. Pretty solid. I'm not sure if you guys have seen this, but definitely check it out if you like Monster. And make sure to hit the like button, subscribe. Also, get into the free Discord chat, the Facebook group. You might as well check out my Patreon. All of those are linked right down below. So let's talk. Again, overall, it was an interesting day. We had some choppiness. And when we're looking at SPY here, which tracks the S&P 500, what we're noticing is, well, a lot of the same of what I've been saying, and that is that we're trapped in this little range between 416.50 as support, right? That was resistance a couple weeks ago. Now we're holding that as support, and we'll talk about that in a second, with resistance at about $418. And let's talk a little bit more about this right now. If we look on the 5-day, 5-minute, actually more on the intraday chart, you can see this. Look at what happened this morning, right? We were holding 418 as support, which was pretty bullish, and what would have been even better, even more bullish, would have been if we used 418 as a launching pad, right? And we ended up breaking out above the pre-market high at about 418.50. If we broke that and we ended up going to 420 plus, that would have been great. But the opposite happened, right? The opposite happened. What we can see is we opened up and then boom, the S&P dropped like a brick from 418 to 416.50. And you guys that don't believe in technicals, well, what do you know? We held 416.50 on the dot, and this is what I was talking about pre-market yesterday and the day before that. So we've been talking about this, and SPY held that, and we ended up rallying for the rest of the day pretty much, other than that initial drop. The rest of the day was a pretty decent day, and we closed right under 418. And now after market hours, we are pushing up a little bit here. We're fighting above 417.50. So we'll see how this ends up playing out. But very simply, for the rest of this week, tomorrow, the next couple of days, right, I'm going to be watching 418, right? That's just the bottom line. That is what I'm going to be watching closely. And I've said this before, I'll say it again. 418 breaks, the ascending triangle here on the 10-day chart, it's going to play out. And in fact, it's already, well, it's not fully played out, because for it to play out, it needs to break out. We're not there yet, but everything is lining up for the breakout. Now we just need to wait for the breakout, right, guys? So watch out for 418, 418.50. If we take that level out, I think we're going to maybe not rocket ship all the way up, but there's going to be a good pump. Let's leave it at that, right? And QQQ, if we're looking at this one, I'll show you guys what I'm personally seeing, right? So we talked about how we broke above, what was this, 340, right? We talked about that yesterday, which was bullish, and we closed right under 342. That was the high from back in the middle of April. And the fact that we failed to break 342 this morning and we dumped like a brick, right? You can see it here on the intraday chart. We dumped from 342 actually, down to about 339, 340. That was not good. That was obviously a sign that the bears won in the morning. And then we pretty much just consolidated for the rest of the day. We didn't have an upswing like the S&P did. The QQQ just pretty much consolidated, right above 340. So the fact that we held 340 at close, I think this is setting up for another move tomorrow, probably an upwards move, maybe towards about 342 again, because you guys can see here on the 5-day, 5-minute, QQQ is holding the uptrend as of now. We held it at a higher low today, so that's a good sign. And again, that's leading me to believe we're going to rip up tomorrow. And if we see a gap up in the markets tomorrow, that's going to be another good sign as well, and we'll cover that in the morning update videos that I do every day on Patreon and on the YouTube channel memberships, right? So yeah, those are some thoughts on QQQ, SPY, and the VIX overall went down 0.5%. What was this? Silver went up 0.5%. Gold went down 0.2%. So honestly, guys, it wasn't too much of a day today. It wasn't that eventful. The morning was fun. Seeing that big drop. Well, depends what side you were on. I didn't personally short anything, but I was just watching it, and I thought it was fun action to see the markets drop and consolidate and rip up. In the case for SPY, right? And QQQ, like I said, consolidated. So what do you think? Let me know down below in the comments, and make sure to hit the like button if you all are enjoying the video so far, because let me tell you, we're going to get into some stocks here. All of the stocks that we're going to talk about today, 7 in particular, they all reported earnings, and we're going to start off this section of the video with Pinterest, guys. And let me tell you, we got news about a week, 2 weeks ago about Pinterest from Cleveland Research, I believe the name was, or maybe it's not Cleveland Research. It's definitely Cleveland something. Let's leave it at that, right? And they said that this upcoming earnings report, which they just reported today, they said it might be underwhelming. And let me tell you guys, they were right. At least the market is reacting as they really, what's the word here? The market's reacting exactly how Cleveland Research kind of, forecasted, right? We'll leave it at that, because they said that the earnings might not be that great, and the earnings came in decent. I mean, 11 cents versus 7 cents estimated. They beat that on EPS, and revenue came in at $485 million versus $473 million, and they actually narrowed their losses, from previous couple of quarters, and the stock is still down. So it looks like Cleveland Research had some, I don't want to say inside information. They might have, who knows, but they got it right. Let's put it that way. And the stock is reacting very negatively. In fact, it is down over 10% or around 10%, which is a pretty big move considering Pinterest is like a $60 billion company, or at least it was. To give you guys some perspective, if a company $60 billion like Pinterest, right, let's say for example, and it drops 10%, what is that going to go down to? It's going to go down to $54 billion, right? So that's a lot. It's losing billions of market cap as we speak right now in these 10% moves. That might give you, a little different perspective of how to look at it. And it's even crazier with the big companies. If Amazon, let's say, went down 10%, we're talking like hundreds of billions, or about 100 billion, right around there, which is nuts. That is completely nuts. And we'll talk about that more on another video. So Pinterest beat EPS, beat revenue, and the losses narrowed, but the stock is not liking it. And I'm not throwing Pinterest out the window whatsoever. In fact, I think this could be a dip buy. Call me crazy, but I think as the dust settles on Pinterest, we hover around, let's say 70 for a little bit, 71, 72. I believe this might see a push back towards the mid to high 70s. Again, as the dust settles. And could I be wrong? Of course. I've been wrong before, but I feel like this is a strong company. They're doing well. And guys, listen, one quarter that's not that great, that could end up being a buying opportunity depending on your time frame. Sure, if you're looking at 3 days away, it might not be a buying opportunity because we might sell off more in the next 3 days. We might consolidate a little bit, and you might not make money if you bought now and held 3 days. But if you're looking a couple months out, you think, okay, next quarter, the quarter after, it might be better, which it very well could be. Now it could be a beautiful buying opportunity, as Pinterest could very well get back above $80 even, right? So I really like Pinterest here. I'm watching this dip very, very closely. And the stock number 2 that we're going to talk about, stock number 2 here, which I've mentioned is my favorite stock. Well, I keep going back and forth on what my favorite stock is. I mean, you guys know that. But Google, it's up there, man. It's up there. It's either 1 or 2, and this is why. Look at that beautiful pop after hours that we're seeing right now. We're up 5%, and it being my biggest position, you guys, well, one of my biggest long-term positions, you guys can pretty much, and I'm sure you guys are doing this yourselves, you're making a lot of money right now. Let's be honest. If this is one of your biggest positions on paper, we're making some good money right now on Google, and I'm very happy about it. And this company is just... it's just a beast, guys. It's a beast. They did EPS of $26.29 versus $15.80 $1.82 estimated. So they beat EPS by pretty much a double up. Well, not exactly a double up, but they beat EPS by a lot. Let's put it that way. And revenue came in at a very nice beat, considering Google is one of the biggest companies in the world. They did $55.3 billion versus $51.7 billion revenue estimated. So a double beat for Google. Advertising sales, they're up a ridiculous amount year over year, guys. Advertising sales came in at $44.7 billion versus, get this, brace yourselves, guys, $33.76 billion. So off the top of my head, that's got to be, and that was year over year, by the way. That wasn't the estimate. That's what they did last year, $33 billion. So year over year growth for advertising sales is like 30%, 25%. I mean, guys, this is incredible growth for a company that's already $1 trillion plus. I mean, I don't know exactly what it is right now. I probably should know this. I haven't checked in a while. But this company's massive, guys. GOG. Let me pull it up on my Yahoo Finance app very quickly to see the market cap. Okay, it's $1.5 trillion. So that makes it even crazier, the fact that it's moving up 5%. And this goes to show, like I said before about the market cap, Google moving up 5%. You have to realize we're talking hundreds of billions of dollars here, guys. It's increasing in value, about 100, 200, right around that range. So that is a very awesome earnings report. Just from a brief glance, the stock is crushing it. And this is one that, again, is one of my biggest positions. I started buying Google, and I'm very happy I did. Thank you to the God above, right? Because I started buying this at about 1,500, 1,700, 1,800. You know, I even bought some at 2,000. This is a company that I look at and I'm like, I'm going to continue averaging in over time on all the dips. I'm just going to buy more. This is not one that I'm swing trading. It's just a long-term investment that I don't plan on selling for a very long time. And that's how I'm viewing it. AMD is another one, right? Maybe this is not as long-term of an investment as Google. You know, I wouldn't mind selling AMD maybe in 2-3 years from now if it hits my price target of about $100, $110, which I'm confident it will, probably even more than that, a lot more than that. And AMD is crushing it after hours, guys. Look, it closed at 85. Now it's sitting pretty over $88 per share, and they did EPS of 52 cents versus 44 cents. Estimated wide beat there on EPS, and revenue came in at $3.44 billion versus $3.21 billion estimated. So a double beat for AMD. And if you guys know this, you might not know this, but this is one that I started buying at about $76, right? And I believe this is a $100 plus stock. And like I said, I'll hold this for 2-3 years at least. And I don't mind selling it if, let's say, for example, AMD got to $120, $150. I wouldn't mind selling a stock like AMD. But Google, on the flip side, I don't plan on selling that one. And Pinterest, I don't own, but I might end up picking up some shares here in the next couple of days. We'll see how that goes down. So for AMD, look, it filled the gap all the way from $85 to $88. And shout out to all you guys watching these videos, because we called this out exactly. And if you all were in AMD with me, well, you made money. And I'm not telling you what to buy. I'm not advocating for you to just buy AMD because I'm in it. But if you did your own DD, your own due diligence, you understood this company, you bought in a couple weeks ago, you'd be up money right now. You'd be making some money right now. And I'm personally up from 76 to where we are now. I'm up about 12, 13% on my position on AMD. So I like this. It's going to break out further, in my personal opinion, in my humble opinion, and we might see a bit of a pullback before we do so. So watch out for that. Maybe down to about $86, but from there, we're going to rip up above 90 again, in my opinion. And another one here that I love, I've also been buying for, well, I haven't really bought recently, but months ago, I bought a lot of Starbucks. It's Starbucks, SBUX. This is the next stock. They also just reported earnings. They did EPS of 60 cents roughly versus 53 cents estimated, so a nice beat on EPS. And revenue also, actually, no, it did not also beat. It came a little bit short. Revenue came in excuse me, guys, at about 6.7 billion versus 6.82 billion estimated. And what was this? Okay, I'm reading my notes as we're talking here, guys. The guidance for full year 2021 came in a bit stronger than expected. Well, it kind of came in line, but the higher end target was a bit higher than expected. They're looking at revenue of 28.5 to 29.3 billion versus 28.61 billion estimated. So that's nice. And they also reported, this is a key number, I always mention this when we're looking at restaurant stocks like Starbucks, McDonald's, Texas Roadhouse, when you're looking at retail in general as well, Target, Walmart, the companies like this, Home Depot, you want to look at comparable store sales. And for Starbucks, that came in for Q2 at about a growth rate of 9%. So they grew pretty nicely, comparable store sales. And I believe that's domestically because when I'm looking at this China statistic, in China, they grew, get this, guys, 91% year over year. That is nuts for comparable store sales. And that makes sense. I'm assuming we're all bouncing back from CV all across the world, right? And I mean, China is for sure bouncing back as well. So 91% growth there. That is pretty insane. So we're going to be watching this dip. And as you guys can see, Starbucks is dipping. It did break under 115, which is a key support. So as long as it's under 115, and it did go to all the way down to 112, I think Starbucks could end up selling off a bit more. There could be some selling pressure to about 110, and that could be a decent dip. We have to watch that 110 move. And for me, with my position, guys, I've been buying. I said I bought months ago, right? And that was at the 70s, mid 70s. I bought a little bit in the 80s as well. And I haven't really bought much since. And quite honestly, I don't plan on buying more Starbucks right now. For my position, I'm viewing it as a hold because I'm already in at a very favorable price. So I'm just going to be, holding on to my Starbucks position where it is. And don't get me wrong, if it gets down low hundreds, heck, if it somehow gets into the 90s again, 80s, I'd be buying more. But as of now, where it is, I'm simply holding on. And we have Microsoft, another stock I own. And I just realized I own pretty much all the stocks we're talking about today, except for 2 or 3 of them, right? Actually, yeah, 3 of them I don't own. And Microsoft is one that I do own. They just reported earnings of $41.7 billion versus $41.05 billion estimated. And revenue, well, that was actually for revenue, not earnings. Earnings came in at 2.03. Well, EPS came in at 2.03 versus 1.78 estimated. So a nice double beat there for Microsoft, and maybe their revenue wasn't as big of a beat as expected. That's why the stock maybe initially went down. You guys can see it tanked from 260. It closed at all the way to 250. So that was a drop of about 4.5%. And then now we're seeing a nice bounce back. So what the heck's going on right now? Or actually, no, that was a one-off candle. Now we're right back down to 250. So that is interesting, right? So they did a double beat. Intelligent Cloud revenue also beat by a little margin there, $15.1 billion versus $14.9 billion estimated. And personal computing also beat $13.04 billion versus $12.6 billion. So a nice beat overall over there for Microsoft. And for me, guys, I own this stock already. I couldn't tell you my average cost because I don't check my long-term portfolios all the time. I just don't. I'm not nitpicking stocks I'm owning for 5-10 years. I just buy and forget about it. It's not a swing position for me, but for a swing position on Microsoft, I would consider it at about 250 where it's at now, maybe even lower, mid 240s if we were to get down to this 180 moving average, which we're kind of close to right now after hours. So we'll see if the selling tomorrow on Microsoft persists. If so, we might be able to get a dip, right around the 180 moving average, 245, like I said, on this 4-hour chart. So watch out for Microsoft. Visa is another one. This one I don't own. I own MasterCard, so I figured what's the point of owning Visa and MasterCard? I might as well just own one of them. And who knows, maybe I will buy Visa in the future if the price is right. But at this point, at 230, I'm not going to be forcing it. I mean, I was watching it a couple weeks ago at 200, didn't pull the trigger there. So why would I buy it now, right? That's kind of how I look at it. There's no point of forcing it, but we're still going to cover it here, guys. EPS came in at $1.38 versus $1.27. That's a nice beat. And revenue came in at $5.7 billion versus $5.55 billion estimated. So a nice double beat for Visa. The stock is moving up like crazy. You guys can see it's gapping up from 230 to 236. That is a nice little $6 move. It's up about 3%, a little under 3% here after hours. So we'll be monitoring this one. And of course, also, MasterCard, its competitor, they probably report tomorrow, right? No, 2 days from now. So they report on Thursday. We're going to be watching this one. And like I said, I own MasterCard. I love this stock. And why do I own this over Visa? Well, the truth is they're both great. But MasterCard, on the flip side, it's a bit of a better growth company. They grow their revenues faster, and you guys can go and look at that for yourselves, right? Quick little pro tip here. Type in, and this is not a sponsor, but this is something I use. Type in quickfs.net. Quickfs.net. Type in any company, and that website gives you 10 years of data on companies, and you can see year over year how much they're growing. And usually, guys, you have to pay for anything more than 5 years of data, 3 years of data on Yahoo Finance and all these other finance sites. But for some reason, I don't know why, QuickFS is free and they give you 10 years of data. So I'm all for it. So go check that out. And yeah, type that in your browser. Go get in there and look at the data, and you can see MasterCard grows more than Visa. So I like these companies, guys. And one more before I end off today is Enphase. This is one that I don't own as well. So out of all these, I don't own Enphase, Visa, or Pinterest. I own all the other ones we mentioned. And Enphase here, they just reported earnings of 56 cents versus 44 cents estimated, and revenue came in at a little bit over 300 mil versus 292 million. So a nice double beat there for Enphase. We initially dumped off, and by the looks of it, we're actually still selling off. Yeah, we dumped off from 170 to 152. Wow, that's a big dump, actually. 10%. Holy crap. And now it's up to about 158. So is this gap going to fill, from 170 to 150? Are we going to fill the gap back up to 170? That's a possibility, considering here on the 4-hour. Look at this. On the 4-hour chart, Enphase actually broke out 2 days ago, or a couple days ago, right? It broke out of the overall downtrend, the moving averages as well. It got a bit overbought, admittedly, and now we're selling off like I just showed you, and it looks like we're trying to hold the downtrend channel as support and the overall moving averages as support as well. So I think if Enphase could hold 158, 160, this could be some sort of a bounce back play. So I'm definitely going to be watching that. And I'd love to know your thoughts, guys. As always, let me know down below. If you all enjoyed this video, make sure to hit that like button, subscribe to the channel. That really helps me out. And also, you leaving a comment helps me out in the YouTube algorithm. And I'd love to know your thoughts in general. What stocks you're buying, what stocks you're watching, and what are your thoughts on these different companies that we covered in this video. And make sure to also check out the free resources down below, the Discord chat, the Facebook group. You guys could also get some free money from M1 Finance, from Coinbase. All of those are linked down below. And you could check out my Patreon if you want buy and sell alerts, real time, morning update videos, call outs throughout the day, and exclusive content. That's all on Patreon. And again, all of those are linked down below. So I'll catch you all in the next video. Thanks for watching. As always, stay safe out there. Keep crushing the markets, guys. Peace out.